previous presentations and on previous calls. For those that are new to the company, QYOU Media is completely reliant, I guess, on two main things. One is what's becoming known increasingly as the creator economy. The creator economy would be the business wrapped around the both the people who create and the people that are featured in short form digital content or social video around the world. So that's YouTube, TikTok, Instagram, Snapchat, Twitter, Facebook, all these platforms that we're all very, very familiar with that have literally millions and millions or billions of hours of content that are being distributed. Everything we do is focused around that. In the US here in Los Angeles, where I'm sitting today, we have an influencer marketing business under what we call QYOU USA. I'll talk a bit more about that in a minute. That deals with influencer marketing of other people's brands and products. But the primary part of our growth and focus, as most people who follow us would be aware, is in India. I get asked a question all the time. I answer it all the time. Why India? India is the largest youth-oriented or youth-aged country, I should say, on the planet Earth. There are 800 million plus people there, 30 years of age or younger. Just recently became the most populous country in the world with 1.4 billion people and continuing to grow from there. It's also a massive territory for the consumption of social video content. It's the largest territory of users for YouTube, for Facebook, for Instagram. It was TikTok's most important territory. So a lot of you have heard me speak before, have heard me talk about all of this, but in short, India is kind of Mecca for all things that revolve around the universe of social media, or what's in the center of this particular roadmap, the creators and digital content stars. So our business revolves around all of that, as most of you, except for the very new listeners, would know. And this roadmap is really the roadmap for what we've been talking about doing since probably almost a year ago now, in terms of building out our business and connecting the various parts of our business that we've been adding both organically in terms of the growth and also through some key acquisitions that we've done. I'll come back to this at the end of the presentation here in a few minutes, because I want to talk a little bit more specifically about things on this. But when people ask me about why we haven't been in the news, what's been going on, what's taking place, et cetera, the truth is that what we've really been doing is connecting all these dots, all these arrows that you see on this between the various companies, the connectivity behind all of that, the goal that we have of to have the whole be greater than the sum of the parts. These are all interconnected. They're all interwoven. They're all reliant on each other, and they all feed off of each other. And so what we've really been doing since really part of Q4 and going into all of Q3 or Q1 rather, I'm sorry, that's about to end here in a few days. We've really been heads down, and heads down is not as exciting as when we're making new announcements all the time. It's not as perhaps visible as what people would see when we're making big announcements about things, but we've really been optimizing. And why have we also been doing that? We've been doing that because that's what the market's been looking for. All of us that are on this call that have been investors over the last 2 or 3 years know that in late 2020, early 2021, for all stocks, not just QYOU Media, it was a boom time period. The markets were white hot. Most companies that are out there today probably hit their all-time trading highs over the last couple of years, including QYOU Media in the spring time of 2021. Since that time, unfortunately for all of us, and this includes all of us here at QYOU Media, it's been a real dogfight, a real struggle to get investors to recognize what we're doing. I've talked many, many times with some of you even individually about the fact that our market cap 2 years ago, when we had probably less than a fifth, maybe even closer to a tenth of the assets that we now have in the business and the revenues and growth that we've had in the business, our market cap was 3 or 4 or 5 times greater than it is today. That makes no sense. That's completely a result of the market conditions. That's not a result of what we've been doing. And so I want to remind investors of that. All of you have seen this graph. This is, I get asked, when are we going to report more financial news? When will we do that? The answer is that we switched our fiscal year end to calendar year end on the TSXV. As a listed company there, you have 120 days after the end of the year to be able to file. Frankly, that's not on us and our finance team. That's on the auditors that need to perform their full audit, which in our case, because of India, takes a little bit more time and is complicated. Some of you may be even familiar with companies that have been struggling to make their audit deadlines over the last couple of years because the jam up that's happened there. We push the auditors, we work ahead, we've done everything possible to make that happen faster, but we cannot release our results until the audited financials are done. And every quarter, every fiscal year, we're constantly always in a tug of war and a battle over revenue recognition, timing, and when we're going to recognize this particular piece of business with ad revenue or whatever. It's always a back and forth process. We're in that right now with the auditors, just as we are every quarter and every time we go through one of these audits. But we're sticking with our number of 28 million. We might come in just very slightly underneath that, depending on some revenue recognition. But effectively, 28 million has been and remains the target number for calendar 2022. As you can see from this graph, that's, it's over 100% revenue growth. And we certainly had major revenue growth in 2021. So we're extremely happy with what's happened for the company during that time. And we've invested into the business. We've invested into the chart that we were just looking at and to building the business. And it's part of what we've raised capital for and what we're doing. It's the mandate that we have to be a growth business and to continue to grow the company. The other chart that I think people have to be reminded of is this one. We've had sequential quarter over quarter revenue growth for what will be 2 consecutive years now. We will certainly be reporting in Q4 our highest quarter of revenue in the history of the company. And I think most of the investors on here, again, I can't tell you exactly what the numbers are, but I think people will be very happy to see that our adjusted EBITDA number, which is a reflection of our cash burn in the business, is at one of the lowest points it's ever been. So we're continuing to burn less cash to grow the revenue of the business, and you'll see that continuing through 2023. Have we had to slow down the growth trajectory a little bit in order to get to an EBITDA positive result that we've promised the market at the end of Q2 of this year, so in June of 2023? The answer to that is yes. There are some acquisitions, there are some new channels, there are some new initiatives that we've wanted to launch, but we've held off on that. We know that for investors, getting to a cash flow positive position, and for ourselves as well, is extremely important. So we're hell-bent on making that happen. But nevertheless, we expect that when you look at this graph, when we add in Q4, it's going to look the same as it looks to you right now. And we expect the same type of growth that we've experienced all through this year to continue into 2023 or throughout 2023 and beyond. So there are no real surprises that are coming. There's nothing that's being hidden. There's nothing that we aren't telling people. We're grinding away, and grinding is not quite as glamorous and fun as when you're acquiring new companies, as when you're launching new channels, as when you're getting new products into the market. But the fact of the matter is that the launching of new products and services takes time to get to cash flow break even. It takes time to pay off. What does that translate into? That translates into higher losses. And we've heard from the market. We look at what's happening in the overall public markets, not just with QYOU Media, but with every company, including the largest ones in the world. And there's a huge amount of demand to tighten things down that reflect the current financial markets globally. And we're doing just that. So we're continuing to grow, we're continuing to build the business, but we're optimizing. And we're looking for ways that we can squeeze the most juice out of the orange that we possibly can, while also spending as little money to be able to get there. And so what you'll see when we report Q4 at the end of April, it'll be on April 30th, I think is the exact, I'm not sure if that's the exact date, but the very end of April, again, reliant mainly on the completion of the audit that has to be done before we can report numbers. You'll see the trajectory that you see in this graph continue. And so there'll be no surprises that people should be thinking about or happening because we haven't yet released earnings. So I want to make sure I leave time for questions. So going back to this roadmap, here's what's really happening on this roadmap. Here's what's going on and what we're doing and all the different pieces of the puzzle that exist. The reason I wanted to show this is I wanted to make sure that it was clear to both current investors or people that have been watching us for a while, along with new investors that come in, is these are just not hypothetical boxes that are on a roadmap that we're talking about or thinking about. These are actual products and businesses that are launched, that are in market, that we're doing things with, that we're creating and driving revenue and driving profitability with. And the examples that I'll show you just sort of in real time here, on the far left is on our channel. You're all very familiar with the Hindi channel. We've actually been having some increased success with the Hindi channel of late. We have not reached an all-time new GRP level, which is why you haven't heard an announcement about that. We won't until that happens, hopefully again, but we're continuing to push and to solidify that. We've been in the high 30s, low 40s in terms of that, the GRP for that channel. We're quite happy with that, but we'd like to get back into the 50s, and we're executing on a lot of programming things. And again, we're tweaking that 24/7, 365 days a year to get everything we can out of that. Another great example of our tweaking is the Marathi channel. We launched that on broadcast. Broadcast is the most expensive platform to be on. You burn a lot of cash in the first couple of years on broadcast. We weren't happy with the performance of the Marathi channel on broadcast, so we pulled it back. We're running it now only on digital TV platforms. And it's a perfect example of where we're not just going to burn and keep doing that in the market that we're in today. We're going to pull that back. We're going to minimize the revenue impact that it has on the business, but we're going to maximize the burn impact, the negative burn impact that it has on the business while we retool it, we retweak it, we retest it, and we optimize it so that we can put it back into a broadcast environment. We're happy with the results that we're getting from the other digital smart TV channels, and I think you'll be seeing some really interesting and exciting announcements coming from us in Q2 around what's happening on the channel side of our business. On the streaming side, I get asked a lot about QPlay. We haven't really promoted QPlay at all yet. QPlay was initially designed to be a bundle that goes on to smart TVs and for OTT and streaming services, so all of our channels could be bundled into one environment. Why is that? We're trying to aggregate all the viewership as a whole so that on an aggregated basis, we can maximize the value of those channels to advertisers. We're just coming out of the gates for this. This is just the beginning of a consumer, direct-to-consumer push for us. We're testing it. Again, we're optimizing it. We're seeing what people like and don't like about it. And when we feel satisfied that the product is ready for us to spend real dollars around it, and when we're satisfied, frankly, that the public markets and other things and the stability and profitability of other businesses that are contributing more money than that today are doing so, then we can start to turn the dial up on that a bit more. But these are the perfect examples of things that we're being very careful about and hopefully being very smart about, rather than just spending and hoping that we get somewhere. We're being much more tactical than that. On the influencer marketing side, people know that last year we added Chatter Social to the mix. And QYOU USA, our business here in Los Angeles, is growing spectacularly right now. It's going to have well over 100% revenue growth again. It's highly profitable. It's operating at great gross margins, and we keep adding customers to that. So we've got many movie studios, many game companies, automotive companies, toy companies, and we continue to add to our list and arsenal of blue chip brands and companies that we're working with our influencer marketing. Many people have asked about TikTok. Yeah, we're concerned about TikTok. We're big players in the TikTok world, but frankly, if something does happen with TikTok, we've already seen what happened with that in India. People don't stop using social media. They just move to another platform. Our belief is probably most likely that would be one of the three of Snap, Instagram, or YouTube. And we have great relationships and great working capabilities with all three of those platforms. We're platform agnostic. So we will go with our capabilities that we currently use with TikTok on another platform should anything happen there. In India, Chatterbox and the addition of Chatter Social continue to move very strongly for us there. And I think the most important piece of the influencer marketing business is that anybody who's on this call should know by now that influencer campaigns, whether it's on Instagram, on TikTok, on YouTube, whatever it might be, these are mainstream marketing channels for brands and advertisers now. Even as recently as 3 to 5 years ago, I might have told you that when you were launching a product into the market, the digital campaign that was going to run on a short form video app was what the secondary part of that was going to be. We've seen in real time in these businesses where brands and advertisers are now talking about whether television or other types of media, billboards, et cetera, are what they're going to use in addition to the primary part of their campaign on digital media. We think we'll reap the benefits of this as it goes forward, and we're gaining great ground with adding more and more customers to the mix in those businesses. Q Studios. Just one example of that, the image on the left is Baklal Baklal. That's our show that we created with Baklal, who's one of our most popular shows on our Hindi channel there. We're creating original content with him. Why are we doing that? We're doing that because we know his content is popular. So we find out that one of these people has popular content, we go back to them and we finance and create on our own in a profitable way because we know the ad revenue, or we can project the ad revenue that's going to come with that content as we move forward. We own that content. That's ours. We're making it exclusively for Q channels. So we're beginning to build content assets that we have ownership over on the channel side of our business. Hyundai is an example of what the Q Studios business here and the QYOUSA group is doing. That's where we're going with influencers and we're creating original content. We're filming it, we're editing it, we're putting it together. And that campaign was so successful for Hyundai that we recently won the #1 award at the Association of Automotive advertisers and companies in Chicago for the campaign that we created with them. Again, we're seeing great success in a very tactical, very specific way with something that sits on this roadmap for many of you as sort of a hypothetical. What are they actually doing? Jace, who many of you know of and are aware of, has been working, as you know, with Starlifter for almost 6 months now. It's all the data from all our different businesses is now being ingested into the app, or not the app, but the platform that's being built for all that data to come in. It's our influencer marketing group, primarily here in the US and somewhat in India, that are the first people that are starting to use that data. They're using it to create more effective content campaigns. They're parsing that to make sure that the value that we're creating is maximized in terms of the performance of the campaigns that we're seeing out there. That's just started. That's just beginning, but it's something that we're already starting to use and see benefit from. Down in the lower right-hand corner, Maxim Tech. I'm going to make the statement that I think Maxim Tech may end up being one of the greatest acquisitions that we've ever made in this company. Maxim Tech has an incredible platform that's road tested for both ad-supported gaming and cash gaming capabilities with their content and their platform. These are massive opportunities for us in India. We're already starting to work on products, or have been working, I should say, on products over the last 4 or 5 months. We even started before the acquisition closed, and you'll be reading very, very exciting announcements about products that we're putting into the market in Q2. Across all of these businesses that you're looking at these roadmaps, on this roadmap, you will hear announcements in Q2, quite a few announcements that will be coming out that will talking about specific things that are happening across all these different boxes that you see, if you will, on our roadmap. So the main message I wanted to convey to people is, do not for 1 minute take, and I've said this on a couple of other recordings, take lack of a press release coming out every week, or lack of hype being put into the market about certain things that are happening, being anything negative in any way, shape, or form for our business. Our business is thriving. It's growing every day. We have held back on some growth initiatives and putting investment capital into those because of marketing conditions. And as we drive towards a cash flow break-even operating capability for the business overall, but everything is continuing to grow. We're extremely excited, maybe never more excited about some of the opportunities that you guys will all be hearing about in Q2. So you'll see that what will happen in Q2 of 2023 is what we've been heads down in. You'll start to see the announcements of products that are coming out of those efforts in Q2 and beyond in 2023. So our bottom line efforts are just as aggressive and just as growth oriented as they ever were, but we're trying to be conscious of what the market is demanding, and we're doing so accordingly. So with that, I think we've got here at least 10 minutes. I can go a little bit over the 1:45 time, and I'll turn it back to you, Brandon, to see if you want to throw out some questions.
Thank you, Kurt. We are now going to open up the call for questions. Participants should indicate that they have a question by using the raise hand tool. I will then enable you to speak. You may also type in your question using the Q&A tool. And thank you, Hero, who has been typing in questions from a QYOU Discord server. So we already do have some questions in the queue here. So let's go ahead and start out with, will there also be a revenue guidance for 2023 like there was for 2022 and 21?
Yeah, the reason we've held off on revenue guidance for 2023 is because of some things that we have been discussing for quite some time in terms of the launch timing, which affects revenue generation and expense significantly. We're narrowing in on what those dates are going to be right now. So I've been very reluctant, frankly, haven't wanted to undershoot or overshoot what we put into the market. We also frankly felt we never received any real benefit from the guidance that we put out when we did do that. So we're debating it a bit on that level as well. But I expect those decisions to be made over the course of Q2. So my answer specifically would be, we're not sure if we're going to provide guidance for this fiscal year or not, but certainly we won't do that until we make some decisions on the timing of a couple of different products that you'll be hearing about over the next quarter or possibly two.
Thank you. I see Erwin Shane has his hand raised. I will go ahead and allow you to speak. Be sure to unmute your microphone.
All right. Can you hear me?
Yes, can hear you, Erwin. How you doing?
What about all these other companies of competition that you're dealing with? I mean, are you feeling any stress from, let's call it stress, impact on your programs from the competition? I guess everybody's is jumping in on India for one thing.
Yeah, I'm actually still shocked that there's as little investor action happening from the Western countries in India as I would think there would be by this time, with the global situation in China and Russia and the Ukraine and South America, Brazil in particular. We continue to be huge believers that India is the promised land. They have at least the closest to a democratic type rule of any of those countries, parliamentary at a minimum. They were under British rule for a long, long time. And so there's a rule of law that exists in India. You can repatriate money into and out of India. We know that. We've done it. So there's so many advantages to operating there that it's been, frankly, quite shocking to us that there hasn't been a much bigger push for people to get into that market. With that said, yeah, look, there's always going to be massive competition. That's part of why we have, from my point of view, why we're not a one-trick pony, why we're not relying upon just our Hindi channel that's been driving our revenue growth in India for a long time and relying on that to continue at that level. We have to add other things to it. We have a couple of products that we're working on, one that we haven't announced to the world at all that I can't talk about yet, that could be the biggest part of our entire business. 2 years from now, we could look back. I had a conversation with somebody yesterday. I told him, I said, everybody forgets that Netflix used to deliver a DVD to your mailbox using the postal service. You know, that seems absurd at this point. I think we're going to look back maybe as little as 5 years from now and laugh about the emphasis that we had on our TV business in India. So I think it's the same sort of situation for us. I mean, the bottom line is we think that our foundation is very, very strong. We think we've been not rewarded by the public markets at all for what we've achieved over the last couple of years. It's almost shocking. And we're just going to keep grinding and keep pushing on, and we're going to get to profitability, and we're going to build more revenue and build more business capabilities, and eventually we believe the market will catch up to us.
Thank you, Kurt, and thank you, Herb, for the question. I see that Joel Marcus also has his hand raised. Joel, I'll go ahead and allow you to speak. Be sure to unmute yourself. Thank you.
Okay, can you hear me?
I can, Joel. How you doing?
Hi. I've continued to buy this stock. I mean, I
Thank you.
really think for 6.5, 7 cents US. I mean, I think it's one of the greater values I've ever seen over an almost 60-year career in Wall Street. Basically, I think your main problem is, and I've brought this up in the past, the only thing you do in Canada is you're domiciled in Canada. You know, I think the stock really would play much better in the US than it would in Canada. Is there any possibility of making this into a US company? That's the first part of the question. And the second part of the question is, there is a lot of selling in this stock. Okay, why people would be selling this at 9 and 10 cents Canadian, I have no idea. Are there any pockets of stock in the hands of, you know, previous acquisitions, previous centers of influence in the company, previous management in the company? And basically, I think the stock would do a lot better if there weren't as many sellers in this stock as there are. I have absolutely no questions about what you're doing fundamentally. I think what you're doing fundamentally is phenomenal. But technically, you know, are there any people you might be able to circle back to, you know, get them to stop selling at these ridiculous prices? Or, I mean, if you can't do that, is there any idea of how much of that, you know, really cheap stock is left out there?
Yeah, I mean, I'll try to give a short answer to a long and involved question. Look, we couldn't agree more. No one's more frustrated than we are with our share price and the trading that seems to happen. You know, we go up to whether it's, you know, 7 cents US or 10 cents Canadian, doesn't matter. And then suddenly at the end of the day, you know, it gets whacked back to 6.5 cents and 9 cents respectively, or whatever it may be. It just, I see it and I just shake my head. I will tell you that to the extent that we know, none of that is happening from former employees, current employees, disgruntled people, long-term shareholders who have been waiting for a long time for this company to reach a much, much higher valuation than what we're at today. Jay Sparks, who works for us, just did a video on the company that I sort of in the closing line of it, and I talk about our quest to become $1 billion company. You know, I can understand why someone could hear me make a statement like that and laugh at me. And we still are trying to do that. We still have full belief that we're going to be able to do that. And it's, you know, for us to experience 20, 30, 40, 50 times growth over where we are today, we're absolutely trying to build a business that will achieve that. But the market has continued to be just brutal for us. Now, as far as the Canadian part of it goes, no one is more disappointed than I am, because I'm the person who pushed it through, and we did spend real money on it to do a NASDAQ uplist in 2022. We had the full intention of doing that. And again, the market conditions, which clearly we have zero control over. There's nothing I can do about Silicon Valley Bank or any other, you know, sort of, or interest rate hikes or whatever it might be. There's nothing, I have no control over these things. The small cap market, for the most part, I know there's an exception and a bright light here and there. I wish to hell we were one of them, that have succeeded, but most companies have been really hit hard over the last 18 months, including our own. I've got to believe that at some point investor confidence will grow. So what are we doing? We haven't given up on a NASDAQ uplist by any stretch of the imagination. We talk about it weekly. Rob Foley from RedChip, who's sitting on this call right now, knows we just had a conversation 2 days ago about a much stronger U.S. recruitment, investor recruitment exercise that we're going to go through starting in April. Why April? Because in April, you're going to start to see a lot more announcements coming from us, and hopefully ones that will get you and other investors even more excited about the future of what the company is going to do than you now are. But we need to get new blood. I think the reality is, from my point of view, is that we've got certain investors that are tired. We've got certain investors that are just flippers who are just in it for whatever reason to make a half a penny, and they're satisfied with that, and they make their $100 that day, and they say, okay, that they go on their merry way. And I think what we've got to do is we've got to get a consolidation done of our stock. Ultimately, 475 million shares is just too much. We've got to do a consolidation. We've got to get a stronger U.S. following. We've got to do an uplist onto NASDAQ. And while that's all happening, we've got to hope that the market returns to a healthier position, and we've got to keep growing and building the revenue profile and the profit, the EBITDA profile of the business. So the revenue profile and the EBITDA profile, that's what I have the most control over. That's what we're continuing to do. What happens with the markets, when we're going to make that change, we're just going to keep plugging away. For those of you who do know me well, you know I don't give up very easily. So we're just going to keep pressing forward, and we believe that the market will follow when and if they get ready to do so, including with the viability of an uplist onto a major U.S. exchange.
Thank you for the question, Joel, and thank you, Kurt. Kurt, I'm not entirely sure how much time you have left. We do have some more questions in queue.
Yeah, I can stay. I've got until 2 o'clock, so I've got 2 o'clock my time. So I've got 10 more minutes, and I'm happy to answer questions.
All right, sounds good. Here's another question from Discord. Now, based on the projection that QYOU will be cash flow positive in the second half of 2023, is that on an EBITDA basis or on a net income basis?
That's on a EBITDA basis, but beginning really with that in Q3 and beginning of July of 2023. We're actually targeting getting there sooner. But again, there's a very, very fine line for us right now that we work every day on between launching and supporting products that are in the market and cost-cutting measures that can maintain the growth that we're looking for, but still get us to not having any kind of operating EBITDA loss. So I hope that answers the question.
Thank you, Kurt. Here's another question from Discord. Is it intended to bring QYOU onto an Indian stock exchange? With the level of awareness QYOU has now reached there, this person thinks it would make sense.
We've had that discussion for years now. So it's there. I think uplisting onto a major exchange in the US is a much larger priority for us from our point of view. One of the interesting things about India is that and we don't get credit for this. It doesn't, I've spoken about this previously as well, is you've got to realize that ad dollars and revenue dollars, I'll say, in India on a relative basis are far less than what they would be in the US. Hard to say, and it depends on exactly what you might be talking about. It could be as low as 5 times. It could be as much as 10 times. So when you talk about us doing $20 million of revenue, just to pick an easy number in India, if those were US dollars, that would be more like 100 million to 200 million. The fact of the matter is that things are just much cheaper there. The benefit of that, obviously, is costs are also cheaper there. And so it doesn't really affect your bottom line results, but it does affect the top line that you see in terms of the size and scale of it because of what you're selling your products for in terms of its cost. The reason I bring that up is there's a bit of a carryover of that in the stock market there as well. So you have an Indian company that on an EBITDA multiple basis or on a multiple might be trading at the same multiple that it would be trading at in the US market, but on a market cap basis, it's much lower than what it would be if it was listed on a US exchange on a relative basis. So that's a bit of a problem that we've talked a lot about. With all that said, it's something that we're discussing, and I think we probably will want to get a little bit bigger before we would make a move in the India market.
Here's another question from Discord. Will there be more channels launched this year that you can talk about now?
There's nothing I can talk about now. Let's put it that way. There's nothing I can talk about now. What I will say is, we believe that we should continue to expand the profile of channels that we have, particularly in the connected TV space, where currently the channel revenue generation is much, much, much lower than it would be on the traditional TV side, but where the costs associated with it are also much lower. We have a number of things that we're working on right now and have been working on to continue to move in that direction. So my answer to you, the short answer, I guess, on that one would be stay tuned.
And here's yet another question from Discord. Can you talk more about the branded gaming portal and how Maxim Tech will integrate with that?
Yeah, I mean, I think honestly, that's probably, for me personally, the area that I'm probably most excited about in our entire business right now. Why is that? The gaming business in India is just exploding right now. I've had a tendency over my career to always be too early. I'm a little nervous right now in India that we're too late. So that's giving me a good feeling that maybe our timing is right on. We're spot on. We're not too late. We're not too late. We're definitely not too late, but it's growing very, very fast. So we've been working feverishly with the Maxim Tech team. There's a lot that's going on there. So my answer would be is that expect to hear news coming out of the Maxim Tech acquisition with products in the near future, and expect us to make that a big priority for the business on a go-forward basis, because we believe the alignment, and this goes back to what I was talking about at the very beginning, the alignment between utilizing the loudspeaker, our channels that blast out to 125, growing up to 150 million people, ultimately, hopefully by the end of the year, getting to 200 million people. That combined with our influencer marketing capabilities and the ability of us to leverage that capability to get the message out to people, now tied in and connected to Maxim Tech, that has a tried and true tested platform that we know works in a lo-fi environment, meaning a low bandwidth environment in India that can successfully attract a mass style audience. These are things that these are not happening by coincidence or magic. These are very tactical decisions that we've been making along the way. And I hope that we'll really see all of us, investors, ourselves as a company, the trajectory of the business in the second half of the year from a revenue perspective. We'll see all this starting to come to fruition as we roll out more products with Maxim Tech in the near term.
Here we have a question from Pedrino, who asks, what are the profit margins for the different parts of the QYOU business family?
They vary quite widely, actually. The highest gross margins that we have would be in the 55% gross margin area, which really is happens in certain cases around the influencer marketing part of the business, and it can go as low depending on the exact campaign or what we're talking about. It can be as low as a 20% gross margin. We munge those all together. Obviously, we monitor them all, each different business entity, whether it's Chatterbox or the channels business or Maxim Tech or QYOUSA. We operate and manage all of those businesses as separate P&Ls. And so they all have their own business targets and agendas. The management of each of those different groups is judged and their success is based on that. It varies, but the low end would be 25%. High end would be 55%.
Okay, and I think we have time for one more question before we have to wrap up here. The QPlay app has over 10,000 downloads in the Google Play Store. How much or how many downloads are on the App Store, and how do you plan to increase the number of users / downloads?
Yeah, I mentioned that a minute ago. We really haven't promoted QPlay at all yet. QPlay has been targeted completely for connected TV users at this point, where they can get the QPlay app onto their connected TV and watch all the channels. We're tweaking some aspects of the app right now, including potentially around what we're just talking here with Maxim Tech and gaming. So there's a lot of work. The QPlay app was conceived and put together before we had Maxim Tech. So there's some work that's being done in that regard. So I think you'll see QPlay get pushed much more heavily in the second half of 2023, and it's kind of idling there at the moment. There's another area that we have a product that people don't even know about that's had probably almost 20,000 downloads that you wouldn't even know about because nobody except for us internally is aware that it's even out there. So you'll hopefully be seeing some exciting numbers in terms of app downloads in Q2, Q3, and Q4 of this year as well. That's a teaser, by the way.
Thank you, Kurt. For more information about QYOU Media, reach us at 1-800-RedChip. That's 1-800-733-2447. Or email us at QYOUF@redchip.com. Please visit RedChip's investor information page for QYOU Media. That's QYOUFinfo.com. There you can view and download the investor presentation and fact sheet, as well as sign up for news alerts. Please also visit the QYOU Media website, QYOUmedia.com. Thank you again to our many participants today, and thank you very much, Kurt.
Okay, thanks everyone. Appreciate your investment and your time.